The dollar versus Canada is breaking to the downside and below some key technical levels. It is the biggest mover versus the US dollar, the Canadian dollar, that is. I'll talk about that currency pair in this video, so let's get started. Looking at the major currency pairs, the dollar versus Canada is the biggest mover, moving down minus 0.31% on the day. So the Canadian dollar is getting stronger, the dollar is getting weaker, and in the process, we're seeing some breaks in some technical levels. In particular, we could take a look at things like the 38.2% retracement. That level corresponded with swing highs from, I guess, Friday's trade as well. Market came up back up to that broken 38.2, found willing sellers in trading yesterday. The price broke above that level, also broke above the 200-hour moving average. That's this green line in the chart right here. At the same time, sending the price up to this swing area up through here where we found willing sellers against that level corresponded with different swing highs going back to these levels right here. This was a ceiling through here. After breaking to the upside, we formed this ceiling. We traded above and below the levels here and then fell below it, and we returned back to that level and trading here today, finding the willing sellers. When we broke below this 38.2% retracement level once again and below the 200-hour moving average as well, we saw increased selling momentum down to the 100-hour moving average where we tried to find support. Recall the past few days we have tried to dip below that 100-hour moving average, but with no avail. This time we dipped a little bit below, it came up and then fell sharply back to the downside, and we're now back below the 50% retracement. So we're stepping lower in the dollar versus Canada, taking out level after level, and that is giving the sellers the advantage, giving the sellers the control, and putting the buyers at risk as these technical levels are taken away. We are now back at or testing this other swing area, and this area also has a number of different swing lows and swing highs going back in time, outlining those levels through here. Admittedly, we traded above and below these levels, but when the price moved above, it went higher. When the price moved below, it moved lower. There was a few little wonky points like right here, but then and over here. But then we based here, and here before moving it sharply to the upside, reaching our high. Where did we come back down to? We came right back down to this area right through here where we found support buyers. Again, traded above and below the areas through here, finding support at 61.8% retracement before moving to the upside. So you can see the importance here, just all these little red arrows right through here between the 140 level and 140.007. By the way, 140 is another natural support level. So right now we have to get below the 140 level to increase the bearish bias, and we'll go down, test it 61.8% retracement. That's this low right here. What this chart and this price action says as well is that the risk for sellers is now these two levels right here. The 50% retracement is the closest risk. We stalled against that level in trading last week on the downside. This was specifically on Friday and again yesterday. So that's a close resistance level at 1.40135. The other resistance level for the traders who think that the dollar is going to go lower and the Canadian dollar is going to go higher and want to risk a little bit more on the trade is this 100-hour moving average at 1.40239. So that's my technical look at the dollar versus Canada. It's the biggest mover today, so it deserves a little bit more time. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.